Hey everyone, let's take a look at the assets that are currently actively traded on the market. We'll start by updating the ZEC chart and see what's happening on the graphs. First of all, the key point. Now we made a deviation of the marked block and got a reaction upwards. I considered taking short positions from the current levels to be risky. Yes, there is a sort of false breakout happening with a very nice compression, so caution is required. If we break the support level around $536 and move lower, then from the retest, that is break, return, and retest, it would be possible to consider opening a short position with targets for continued downward movement and a stop above the high. This is a strategy for those who have been watching the market and entered in time. For a more conservative entry point, I would wait for another test of the $609 level and a small local consolidation there. On the forming flag, one could gradually start building a position. For now, my thoughts on ZC remain roughly as follows. The level deviation is about 15% clean, not bad and quite interesting. Moving on to Dash. The situation here is similar. A channel had been forming on the chart, and now we see a breakout beyond its boundaries. I would expect the price around $48.5 to $48.1, from where local short positions could be considered. The FIBA level fits nicely within the $49 to $51 range. It's important to note that I would hide the stop in this situation. We enter from the original level without a clearly defined stop. The potential movement is quite decent, around 20% clean with reasonable risk management. Now let's look at hype. There have been many requests for an update on the overall situation, so we saw a slight disruption of the so-called super cycle. The price didn't reach $43.2 and moved higher instead. We broke the local low, consolidated, and then there was a strong upward impulse. The key point, an interesting channel is forming, and we are currently moving within its boundaries. If we don't consider medium-term targets for the asset, trading from the channel boundaries is an option. Even on the 4-hour chart, you can see the asset pausing. The level isn't being broken. On the daily chart, it's even clearer. There's a formed upper high, and below there's a level at $41.82, which can be used for a bounce. A more interesting approach is local trading from the lower boundaries, considering the full overlap of the imbalance and possible deviation of the order block. For example, a small drop with a trendline retest followed by movement toward the $50 range. In principle, the asset is in short positions, which works in our favor. Upon reaching targets around $41 to $40, one could hedge with long positions and trade the channel. For forward shorts, key levels are stop above $54, the upper range of imbalances. If the asset fully covers the subcompression at $51 to $52, place the stop at $54.30 and observe. If the breakout happens, there's a chance of growth to $60 to $65. Have a great day, everyone. If there are other assets you'd like me to analyze, leave a comment.